Yo guys, what's up? What's up? What's up? What's up? What's up? Good morning, good afternoon, good night. Whenever you be seeing this video, how we all doing? Hope we are great. Hope we are good. Hope we are doing well. Merry Christmas, Happy New Year in advance. So as I promised or as I said previously, I'm going to be, taking us for Forex course. Just as I've promised on my IG, on my Instagram, because here on YouTube, I'm only known for my normal content I post, but now we're going to be taking it to the next level. We're going to be learning together, Forex trading, whatnot, and whatnot. I'm so happy to be doing this, and I hope you are too. So, quickly, let's just dive straight into it because time is money. Time is money, actually. Time is money. It's money. Yeah, so today, simple. We're going to be talking about Forex Trading 101. Forex Trading 101. Introduction to Forex Trading. Introduction to Forex Trading. I'm promising this class is going to be one of a kind. It's going to be superb. It's going to be great. It's going to be unique, actually. So let's dive straight in. So, yeah, it says, what is Forex Trading? What is Forex Trading? Actually, we wish this class was a live class so we could be here together, but maybe as time goes on, we are going to be fixing a live class so we can talk together and make it very much interactive. But for now, yeah, we said forex trading means foreign exchange. As simple as that. When you hear FX, 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 that is like the acronym for forex trading. Forex trading simply means foreign exchange. The global markets where currency pairs are being traded, because everything related to forex trading is uh, the trading that happens between global currencies, between the currencies of two nations, paired together. So that's basically foreign exchange. And in forex, what you do simply is you sell one currency to buy one currency in order to make gain, to make money by the help of your broker, by the help of leverage, by the help of the lot size, by the help of the knowledge you have, by the help of technical analysis, fundamental, and a lot more, bro. So that's what forex trading is. Forex trading also is the largest. Forex trading is the largest financial market in the world. Very big, largest in the world because we have about $6 trillion moving into the market, steady flow. 24 hours, every 24 hours, 6 trillion comes into the market. The next 24 hours, another 6 trillion. It's not like 6 trillion for a week. $6 trillion per day moves into the market. So you can see it's crazy, it's mind blowing. So it's up to you as a trader, as a retail trader, as a swing trader, as a scalper, as a day trader, to know how much or how much you're able to scalp or how much you're able to collect from the market from a particular day. So it's as simple as ABCD. Then the forex market opens 24 hours a day from Monday to Friday. So once you've traded Monday, Tuesday, Wednesday, Thursday, Friday, Saturday is to chill. You can go and do whatever I want to do. Sunday uh, is a day of rest. When it comes to forex trading, Saturdays and Sundays don't trade. We trade from Monday 24 hours till Friday. Every single time the market is open, so you can trade. Forex trading is a decentralized market. It's not controlled by one institution. It's not like your regular market that they control uh, every time. You understand? So forex trading is decentralized. It's decentralized. Premium forex trading is a decentralized market. In forex, you trade currency pairs. You don't. You trade pairs. Sorry, in forex you trade currency pairs. You are predicting whether one currency will rise or fall against the other. So in forex trading, there are two currency pairs mostly tagged together. So let me give you a very, 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 very unique example. I don't know if you've seen all this forex background screen or this forex wallpaper or forex background, basically where they have a bull and a bear. Where they have a bull and a bear. So one is pushing down while one is wanting to go up. So that's basically what this thing is talking about. They're always fighting against each other for one to get more momentum more than the other. So one to have more value than the other. You understand? So the currency pairs, one is always above, one is below. So that's why you either sell or you buy, depending on the one that has more strength. You understand? The economic strength. You understand? So moving on to the next slide. The next slide says Why forex exists? Why do forex exist? Why actually forex exists? Why do we trade forex? Why? Understand? So we say forex exists because country trades goods and services internationally, on the international scale, on the international market, on the international platform. Countries, they trade, they export, they import. You understand? They trade goods and services. That's the reason why forex exists. You understand? Because forex, if you remember, we said forex is foreign exchange, exchanging goods and services. So when you exchange goods and services, it makes the currency pair, or it makes the currency stronger. I don't know if you get. So when the currency is now stronger on the chart or on the forex market, when the currency is stronger, that's when the currency can either, you know, have more value than the previous than the other currency. I don't know if you get involved. Subsequently, it's very simple. I promise. Subsequently, you get to understand, all these things. Let me give you an example of that. You see Benz, you see Louis Vuitton. These are brands of other countries, but we find this produce or this product or these services in our own country. Why? Because it's being traded in the global scale. It's being traded on the global scale. So all those German country and Germany that creates Benz, they import it here, for people to buy, which is making their own currency strong and healthy, has strength. You understand? So that's basically it. Then number 2.2 says bank exchange currency. Why do forex exist? Because banks exchange currency. And the third point says forex exists because company needs to convert one currency to another. Not necessarily companies, we as a normal human, we as normal people, especially now in Nigeria, that everybody wants to jack back. You see people are creating their visa, they want to just run away from this nation, they want to run away from Nigeria to another nation in search of greener pasture. But before you can do that, you have to do what? You have to convert your naira, convert it into euros, into pounds, into dollar, depending on whatsoever currency you're traveling to. You must do what? You must convert your naira into those currency pairs. So once you convert, you are participating in what we call foreign exchange, because you are exchanging a currency pair for an order. For when you're exchanging a currency pair for an order, you're giving one value and you're devaluing one. I hope I'm correct. I hope I'm correct. You know, so that's why forex exists. For exchange of currency pairs. So the other one is forex exists. You know, okay. It says here without forex, global business would be impossible. You see, from all I've explained, you can phantom this. Without forex trading, without forex, without foreign exchange, global business would be impossible, because when nations does not exchange globally, how do how do global business, how does it want to be possible? It's not going to be possible at all. So I hope you're getting what I'm saying. I hope we're going along with me whenever you're going to be watching this video. So slide 4 says, who participates in the forex market? Who exactly are these people that always participate in this forex market? Who make this market move? Who make this market? Who's making this thing possible? Who are these people? Who are these people? You might be asking yourself that question. So number one are banks. Banks, your banks, they participate in forex trading. In case you don't know, they participate. How do they participate? You know, they move in billions daily using interbanks. They move in billions daily using interbanks network. Then the other people that participate are the central banks. Central banks, they participate also to control the interest rate of each state currency or each country currency. Like Nigeria now, our central banks, when our currency is the value of our currency is low, they participate in order to what? In order to mitigate, in order to what? Control the interest rate of naira. Likewise to every other nation. You understand? Sometimes the currency pair will be so weak that they will have to control it. They will have to push in funds, either pushing funds into the market, into the economy, pushing more currency into the economy, or sometimes they'll have to reduce, you know, money out of the economy. You understand? So the point 3 here says corporations and other people who participate in the market, corporation, multinational companies exchange money from import and export. Multinational companies exchange money from import and export. Once, like what I said about the German company, German automobile we use, Benz. you know they participate in import and export because before a Benz car can get to Nigeria, it has to be imported. Like for these people that get cars, subconsciously you might not know, but you're participating in what we call foreign exchange. Because when you have the capital and you want to get maybe Benz, or you want to get a Lamborghini, or you want to get a McLaren or a Ford or whatever. Once you want to get that and you order and they import it for you, you pay either in naira or in dollar. I understand it. You are participating in what we call foreign exchange because you're giving one naira to get value for another naira. Sorry, you're giving one currency out to get the value that another country produce in exchange for another currency. I don't know if this is making sense. It might not. Oh god, it's very simple, I promise you. It's very, 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 very simple. With time we are going to understand what I'm saying. I promise you. This is very, very simple. So another people participate are hedge funds institution, and other people participate again are retail traders like me and you. Small traders using online brokers. Brokers make it more easy for us to participate because naturally when forex existed in the days of old, before you can participate in forex, you have to have huge capital, very big capital. But you know what brokers do? Brokers, they come into the market, to help you subsidize the price you can use to trade. Now, as low as $10, you will trade. As low as $15, you're going to trade. As low as $20, depending on the broker you're using, you're going to be able to trade. So that's the work of the broker. They try to reduce, the price for you to be able to trade. Yeah. So moving on to the next slide. The next slide says currency pairs. Currency pairs. Currency pairs. So forex is always traded in pairs. Like I explained previously, I used the bull and the bear to explain. So now imagine the bull is a currency and the bear is another currency. So they are fighting together for one. They are fighting together in order for one to have more value than the other. I don't know if you understand. But if you see here, there is an example where EG is. It says Euro slash USD. Euro USD. So now these are currency pairs, you understand, that always fights together to have, for one to have more value than the other. So for instance, let's say if euro has more value than USD, we are going to be buying euro because euro has more strength than USD. But if USD has more value and more strength than euro, then what I'm going to do is as simple as ABC. Yes, you said it yourself. We are going to be selling. Are you understanding? It's as simple as ABCD. Then now the first currency on every currency pair is called the base pair. Like now, euro is the first currency here. It's called the base pair. That's what it's called, base pair. Then the second is always called the quote pair. I understand it. The second is always called the quote pair. So now we have types of currency pairs. We have major pair, which are stated here, one of the most important, if not the most important. But yeah, I tagged the most important pair. You know why? Because all contains USD at the back or at the front. Is it that the quote pair is USD or the base pair is USD? For example, we have Euro USD, we have JPY USD, we have USD JPY, we have AUD USD, we have USD CHAD, and so on and so forth. I understand. So any pair that contains USD in it, is a major pair. It's safe to trade. Why is it safe to trade? You might ask yourself that question. So now I'm going to be telling you why it's often safe to trade. Now, number one, why it's safe to trade is because it has a low spread. You might be wondering what the spread is. Boy, what's the spread? What's the spread? What's the spread? Now, a spread is the amount a broker charge once you for every position you enter. So the broker, how to make their own money is they charge you in spread. So spread is that little amount they charge in order for you to be able to place a trade. You understand? Then number two, why major pair is important, because it has high liquidity. It moves smoothly. It has a smooth movement. Understand? Then now we have a minor pair. We have what we know. We have a major pair. We have minor pair. Minor pairs now. Minor pairs are pairs that don't involve USD. There's no USD in minor pairs. Understand? So any pair you see that there's no USD, what should you know? You should know that this pair is a minor pair. Once you see a pair and there's no USD, automatically you should know that this pair is a minor pair. Understand? For example, we have Euro JPY, we have JPY, we have Euro GBP, we have GBP JPY, we have Euro JPY, we have AUD JPY. So these are minor pairs. And you might ask, okay, what's the difference between minor pairs and and what's it called? What's the difference between minor pairs and major pairs, except from this USD not being included? So one of the differences, or the differences between them, is one, minor pair, the spread are often a little bit bigger. One, uh, it is not very volatile like what is it called? Like a major pair. So that's like one of the major difference between it. So the next slide says market sessions. Market sessions. Very, very important actually. Very, very important. Forex operates 24 hours every single day from Monday to Friday. But these hours are divided into sessions. We have the Asian session, also known as the Tokyo session. It opens 12 a.m. GMT when we are all asleep. That's when it opens. It's the slowest session. Me personally, I cannot trade uh, the Asian session. Nah, I can't. Personally, I can't. Ask me why. The reason me I can't trade the reason I can't trade the Asian session is number one, because you see the Asian session is very slow and I don't have patience. I'm a very aggressive trader when it comes to trading. And a trader will take you 15, 30 minutes, will take you 1 hour for you to trade on the Asian session, which for me, I don't really like it. Understand? Because I don't really have that patience for it. But for traders who are starting off, they always love to trade the Asian session. Why? Because they want to be patient. They want to see how the market moves. They are not in a hurry to want to close. They are not in a hurry to want to whatever. So they always want to trade. So it depends on your personality. If you're someone who is fine and you're patient trading it, it's up to you. Understand? But it's a very slow session. It is best for scalping. If you're a scalper, then you should settle for Asian session, because it's very, very good when you want to scalp. It's good. It's best for scalping. Then we have the London session, my favorite session, my best session. The session I love to trade. I love, 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 love London session. I don't know why, but it just resonates with my own personality. Understand? So the London session opens 8 a.m. GMT. It's most valuable. It's the most valuable session. It's very volatile. It's very volatile. Sorry, it's the most volatile session. Very, 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 very volatile. It moves okay. The movement is okay for someone that is like me, as an aggressive trader. We can you might not understand I mean aggressive trader, but moving on, you will definitely understand what I mean by that. So it's high. It has the highest liquidity. That's where the major moves began. That's when the major moves began. By that time, London session, that's when the major moves began. Yeah. So moving on to the next slide, we have still on the market sessions, we have the New York session. I also love to trade the New York session, no doubt, because the New York session is also a good session. It's a good session to trade. It's not slow as the Asian session, so it's okay to trade. The London session opens 1 p.m. GMT. I made this a typo. It's supposed to be 1 p.m. rather than 1 a.m. It opens 1 p.m. GMT. It is the most important session, you know, in terms of news impact, because during that session, news impact are more strong. News impact are very, very strong. So if you're having any news impacts are mostly during the London session. Sometimes there are news impacts during the news impact are during the New York session, but sometimes there are news impact during the London session as well. But you see this New York session, when there's a news, it's very impactful. That's why you have high impact news like the NFP, like the CPI. That's why you have high impact news very very well. So this session is one of the most important session. News impact are strong during this session. Then the next session we have again is London and New York overlap. Understand? When London and New York overlap, I said the London session it opens by 8 a.m. GMT, and the New York opens by 1 p.m. GMT. But in Nigeria, yeah, you know, when this London and New York session overlap is doing, for me, when I see this session overlap is doing 12 from 12 to 2, from 12 p.m. noon to 2 p.m. because that time, that's when like all that time is very very volatile. Like that time for me, you see big moves start happening because that's the time it actually overlap. Actually, you understand? I don't know if you're getting me now. That's the time it actually overlap. Then yeah, it says it starts from London and US session overlap start from 1 p.m. to 5 p.m. and that's the most profitable period. Large moves happens, whatnot and whatnot. So on to the next slide, we say terminologies in forex trading. Terminologies in forex trading. You know, terminologies are very important when it comes to forex trading. Actually, very 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 important because it's just like you're a doctor and you don't know medical terminologies, or you are a lawyer and you don't know the terminologies when it comes to your field. So in Forex, we have our own terminologies that we use as traders. We might not necessarily want to say everything, but we just say something, and then I see something and the next person understand because he's a trader. And I say, this market on 10 pips. It's 10 pips this market moved, you know, and person understand, 10 pips. But you that is not you're not a Forex trader. When you say 10 pips, you be like, what's that? Well, I say, bro, have you set your stop loss? Have you set your SL? Have you set your TP? You understand? They understand instantly, but you who's not a forex trader might not necessarily understand because you don't know what we're talking about. But in this case, we're going to be starting from pips. You know, in terms of terminologies in forex trading, the pips. These are small movements that occurs in the market. The smallest movements in the forex market. The movement of which the markets move. Those are pips. The movement which the market, the market moves in waves. It goes like this, it comes down, it goes like this, it comes down, it goes like this, it comes down, it goes, it comes, it goes, it comes. That is like it moves in wave like this. You understand? So pips are the movements of which the market moves. Like 1 pip, 2 pip, 3 pip, the smallest movements. Those are pips. So when you say how many pips was your trade, they are talking about what is the movement of your trade. How many movements the market move in your trade? Maybe you open a position and your position was 100 pips, and you earn a certain amount, and somebody was like, so you earn $1,000. So how many pips was the trade to? And I'll be like, it's 100 pips. So you understand? So that's like basically pips. Pips is the smallest movement, but when it comes to your trade. So number two, we have TP. TP is take profit. I think I have to explain this one very well so you can understand as well. TP is take profit. So now let me give a literal example. Let's say this is the level of which you entered the market. This is your entering point. Understand? So in forex trading, you don't just enter the market and leave it. You enter the market to make money. So if you're entering here, that means you've seen another zone above. That is if you're buying. Because when you buy, the market automatically has to go up for you to make money. But if you buy and the market goes down, that means you're losing money. You understand? So when you're buying, and this level of which this is a zone you saw, the level you saw that okay, this is a good place for me to buy, maybe on the psychology level or something, and you now enter the market here, and the market now start to buy. You have to have another point above your entering level, that once the market gets to that point, you're satisfied, you're okay with the money you've gotten, so you go out of the market, you take profits. Yes, you take profits. Just like you invest money, and before you invest the money, you say, okay, I want to invest 100 naira, and I want to get 1000 naira ROIO, return of investment, from this trade or from this business I'm doing. Same thing as forex trading. You are investing a money here, and you're looking to get a more higher money here. So when once you've calculated everything and you say, okay, this is the point of which, if the trade gets to the point I've gotten, I'm satisfied with the money I'm going to be getting. So once it gets here, I want to take profit. So you set your take profits here. You understand? So that's take profit. Take profit is the level of which you set in order to take, when you're satisfied, in order to take a certain percentage out of the market that's automatically going to be yours. You understand? So now, let's say this is the zone you entered, what we call stop loss now. Stop loss now, I said if you're buying, the market goes up. So let's say, unfortunately, you buy and the market start coming down. So instead of you to lose lot of money when the market start coming, because if you don't add a stop loss, the market keeps on dipping, 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 you might end up blowing your account. So instead of you blowing your account, you set the stop loss maybe a little bit in the nearest zone below your entry, or the nearest low, or the nearest resistance point or support point below your entry. Set your stop loss. So if the market goes down your entry point and hits that stop loss, that means automatically you've lost and the market closes. You understand? Automatically you've lost and the market. So yeah, guys, that's all about TP and stop loss. Understand? So now to the next on the slide is spread. Spread. I talked about spread earlier, if I could remember correctly, and I said spread is the amount which a broker charge in order for you to enter the trade. So here it says spread is the difference between buy price and sell price. Broker uses spread as their commission. You understand? So it's the difference between the buy price and the sell price. It's mostly, if you look at your trading view, at the top, uh, at the top left, you're going to see the ask and bid price. I know you might not understand what ask and bid price is, but getting there. Is ask is the current buy price, while bid is the current sell price. Ask and bid price here. So if you look at it, you'll see that there's a little gap between the prices. So that gap, that price between them, is what we call spread, and that's what the broker charge for what their own commission. I hope that's understood. Small spread, better trade. So if you have a small spread, the better your trade is. You understand? Because you don't want the broker to be charging you more. If not, it's going to affect the trade. So the next one is lot size. The next terminology in forex trading is what we call lot size. Lot size determines how much you make or lose per pip. Lot size determine how much you make or lose per pip. So we are going to be talking extensively on forex terminology in the next class. So the next class is going to be forex terminology. So I'm going to be explaining all these things in details for you to understand them very, very well. So I'm just giving you like an overview of it here. So don't bother yourself about it. In the next class, we're going to be talking about it very well. Then we have leverage. Leverage, it allows you to control what? Control big positions with small capital. Leverage. So we have leverage, we have 1:1000, 1:2000, we have unlimited, depending on your broker. Brokers allow you to choose the leverage you want. You understand? But some brokers also have limits of the leverage you can choose. Some brokers can give you 1 to unlimited. You can trade as you like. You understand? So leverage is what allows you to enter. The more leverage you have, the more leverage you're given by a broker, the more what is it called? The more leverage you are given by a broker, the more bigger positions you can enter. So the next slide. To the next slide, I'm coming. To the next slide, we have still on forex terminologies. We have margin. You understand? Margin is the broker locks when it comes to you entering a trade. Margin is what the broker locks when you want to enter a trade. So your MT5, if you look at the top, the way you enter the order, when you've entered, once your trade is going and you're trying to strike the trade, not on the charts now, but on on the trade, the main trade. If you look at the top right, you will see your initial balance. You're gonna see margin. You're gonna see lots more other things. So margin is a particular amount the broker locks when you enter the market. You understand? So going forward, I'm going to be explaining it more. Yeah, they say if your margin drops too low, it's going to be a margin call. They're going to be calling a margin call for you. So once they've called that margin call, that means your account is about your trade is about to be closed. You understand? So it's very easy, but on this particular lecture, I'm not going to be explaining very, very well on this particular terminologies because I'm going to be explaining it more better in the next one. You understand? So, and if you run out, if you run out of the margin, it's good. They're gonna close you out of the market automatically. So with this, we have come to the end of today's class. I hope you enjoyed yourself. I hope you had fun. I hope it was very impactful. I hope it was very, very interesting. I hope I did justice to it. I hope you've learned a lot. I hope this is one of the best classes you've had. For those who are looking to actually learn how to trade, for those who are looking to be a profitable trader, I promise you, you're in the best place here. I'm going to be teaching you, guiding you step by step on how to trade, on how to be profitable, on everything you have to know. As I see on this particular one, I took my time. I'm explaining it for you bit by bit, so you have the proper knowledge you have to have. So you have the proper value you have to have. I understand it because in forex trading, education, proper knowledge is what you have to chase first, not the money. Proper knowledge is what you have to chase first, not the money. So chase after proper knowledge, then with time you can get the amount or the money you want to get. So if you've enjoyed this video, you can just help me like this video, comment under this video, share my video. Stay tuned because it's about to be a blast. We're about to make waves from here. We're about to go places. Stay tuned, stay blessed, stay motivated, stay inspired. Thank you for joining. See you on the next class. God bless.